Ladies and gentlemen, I want you to imagine a hidden gatekeeper standing between you and your financial dreams. That gatekeeper isn't a person. It's your credit score, and it has the power to either slam the door in your face or welcome you into a world of better cars, better homes, and lower interest rates. Today, we're taking the keys back. We're not just going to face the gatekeeper, we're going to make it work for us. And we're starting right now with one of the most powerful cheat codes in the entire credit game. It's called the statement date secret. Most people think they just have to pay their credit card bill by the due date to be responsible. That is a fundamental misunderstanding of the rules of the game. The real magic happens on your statement closing date. That's the day, and only that day, that the bank takes a snapshot of your balance and reports it to the credit bureaus. You could use $2,000 on your credit card and pay it in full before the due date, but if your balance was high on that statement date, that's what gets reported, crushing your score for the month. The hack? Log in a few days before your statement date and pay your balance down to almost zero. The bureaus will see a tiny utilization percentage, and your score can skyrocket in as little as 30 days. That single strategy is your first taste of the power you truly hold. It's proof that the system has rules, and when you learn the rules, you can win the game. Now that you see what's possible, let's break down the full comprehensive 5-mission battle plan to build your 800-score fortress. But first, as always, our crucial reminder. The information provided in this video is for educational and informational purposes only and should not be considered financial advice. Your financial situation is unique. Always conduct your own thorough research and consult with a qualified professional. This video is also not sponsored. All recommendations are based on our own analysis. Mission 1: Reconnaissance and the Purge. You cannot defeat an enemy you do not understand. And right now, the unseen enemy is misinformation and errors on your credit report. It is a statistical fact that a significant percentage of credit reports contain errors. Errors that are costing you money every single day. Your first move is to pull your full credit reports from all 3 major bureaus: TransUnion, Equifax, and Experian. Once you have these documents, you are not just glancing at them, you are dissecting them like a detective hunting for clues. Line by line, with a highlighter. You are hunting for 3 things. First, accounts you don't recognize. This is a massive red flag for identity theft, a fire that must be put out immediately. Second, incorrect late payments. Do you have a payment marked as 30 days late that you know for a fact was paid on time? It happens more than you think. Third, simple inaccuracies. Misspelled names, wrong addresses, accounts that were closed but are still showing as open, or a single loan appearing twice. Every single error, no matter how small, is a parasitic drag on your score. It is a weight holding you down that you did not agree to carry, and you must destroy it. The process is called a dispute. For every error, you will file a formal dispute with the credit bureau reporting it. You can do this online through their websites. You will state the facts clearly and unemotionally. A good dispute letter contains 4 key things: your personal information, the specific item you are disputing, the reason you are disputing it, and a request for its removal. For example, I am writing to dispute an incorrect late payment reported on my Visa account ending in 1234 for the month of May. This payment was made on time on May 10th. Please see the attached bank statement showing the cleared payment. I request that this erroneous late payment mark be removed from my file immediately. The Bureau has a legal obligation, typically 30 days, to investigate your claim and either verify or remove the item. This single act of forensic accounting, of demanding accuracy, can itself boost your score by 20, 50, even 100 points. It is the single most powerful first step you can take. It is the act of declaring that from this moment forward, your financial story will be told correctly. Do not skip this mission. Mission 2. Build the unbreakable foundation, 35%. Burn that number into your mind. 35% of your FICO score is determined by one thing and one thing only: your payment history. This is the bedrock upon which your entire credit fortress will be built. You can have the most sophisticated credit strategies in the world, but if this foundation is cracked with even 1 or 2 late payments, the entire structure will collapse. The rule is brutally simple: pay every bill on time. Not just credit cards. We're talking car loans, student loans, mortgages, personal loans, every single financial obligation. A single 30-day late payment can devastate your score and can stay on your report for 7 long years. It's a signal to lenders that you are unreliable. So how do we make this foolproof? How do we build a system that makes failure impossible? We remove the single weakest link from the equation: human error. You will go into every single one of your credit accounts right now, and you will turn on automatic payments for at least the minimum payment, scheduled a few days before the due date. This is your non-negotiable safety net. This is the system that guarantees you will never have an accidental late payment again. Life gets busy. You forget. The system does not forget. Think of it like building a great wall. Every on-time payment is another brick, perfectly placed. Every missed payment is a gaping hole in the wall. A wall with holes is not a fortress. This simple, non-negotiable action transforms your payment history from a source of potential disaster into a source of guaranteed strength. Every single on-time payment is another steel beam reinforcing your financial reputation. It tells the world, it tells the lenders, that you are reliable, that you are a person of your word. And in the world of finance, reliability is currency. This is not a hack. This is the fundamental law of credit. Obey it, and you will be rewarded. Mission 3. The utilization offensive. This is where the game is truly played. Your credit utilization ratio accounts for 30% of your FICO score. It is the second most important factor, and it is the one you can manipulate the fastest. The concept is simple. It's the amount of revolving credit you are currently using divided by the total amount of revolving credit you have available. If you have one credit card with a $10,000 limit and you have a $3,000 balance on it, your utilization is 30%. The golden rule you hear everywhere is to keep your utilization below 30%. And that's not bad advice. It's just not elite advice. We are not aiming for not bad. We are aiming for an 800. For us, the target is under 10%. Yes, single digits. People with the highest credit scores, the 800+ club, consistently maintain utilization ratios below 10%. They treat their credit limit not as a target to spend, but as a tool to create a powerful ratio. We already gave you the statement date secret, which is your primary weapon here. But another weapon in this mission is to proactively ask for credit limit increases on your existing cards. After 6 months of perfect payments, call your credit card company and simply ask, "I've been a responsible customer with a great payment history. Could I get a credit line increase?" Many will approve it without even a hard pull on your credit. If they increase your limit from $5,000 to $10,000 and your balance stays the same, you have just cut your utilization ratio in half with one phone call, instantly boosting your score. This is strategic. This is commanding the system. A more advanced technique some pros use is called AZEO, or all zero except one. This means they pay all of their credit cards down to a zero balance before the statement date, except for one card, which they let report a very small balance, like $10. This shows the credit bureaus that they are actively using credit, but are using it with extreme responsibility. It's a power move, but it requires diligence. We've just laid out 3 powerful missions to build your credit score. If you're feeling that shift from confusion to clarity, do me a favor and hit that like button. And go down to the comments right now and type "Action Taker." It's a declaration that you are part of the community that is done just wishing and has started doing. Mission 4. Strategic reinforcements. Your credit score also considers the length of your credit history, 15%, and your credit mix, 10%. These are longer-term strategies, but they are crucial for pushing you from the 700s into the 800s. First, length of history. This is simple. Older is better. Your average age of accounts is a key factor. An account you've had for 10 years is an anchor of stability on your report. This is why the common advice to close old credit cards you don't use is often terrible advice. When you close an old account, especially your oldest one, you erase that history, and your average age of accounts plummets, which can damage your score. Let's do a quick example. Imagine you have 2 cards. One is 10 years old and one is 2 years old. Your average age of accounts is 10 plus 2 divided by 2, which is 6 years. That's a solid history. If you close the 10-year-old card, your average age of accounts instantly drops to just 2 years. To the credit bureaus, you suddenly look like a much newer, riskier borrower. The rule is this: unless that old card has a ridiculously high annual fee that provides no value, keep it open. Use it once every 6 months to buy a coffee and then pay it off immediately. This keeps the account active and preserves your history. It is a silent guardian of your score. Next is credit mix. Lenders like to see that you can responsibly manage different types of credit. There are 2 main categories: revolving credit, like credit cards and lines of credit, and installment loans, where you have a fixed payment for a fixed term like a car loan, a mortgage, or a personal loan. Having a healthy mix of both shows you are a versatile and trustworthy borrower. Now, this is critical. Do not, under any circumstances, go out and get a loan just for the sake of improving your credit mix. That is insane. It's like setting your house on fire to test the smoke alarms. However, if you are already in the process of rebuilding, a tool like a credit builder loan or a secured credit card can be a phenomenal strategic move. A secured card is where you provide a cash deposit, say $500, and that becomes your credit limit. You use it like a normal credit card, pay it off, and it reports to the bureaus as a new line of credit. After 6 to 12 months of responsible use, many banks will graduate you to an unsecured card and refund your deposit. You have now added a positive trade line, improved your mix, and likely increased your total available credit, which further helps your utilization ratio. It's a triple win. Mission 5. The Fortress Mentality. This is the mission of patience and discipline. You can execute the first 4 missions flawlessly, but true mastery is measured in consistency over time. A credit score is a lagging indicator of your habits. It is a reflection of the past. To build an 800 score, you must live the habits of an 800 score person and let the score catch up. What does that mean? It means your new habits become permanent. Autopay stays on. You always know your statement dates. You treat a 10% utilization as your personal zero line. It also means protecting your score from unnecessary damage. Every time you apply for new credit, it results in a hard inquiry on your report, which can temporarily dip your score by a few points. This is different from a soft inquiry, like when you check your own score, which has no effect. A hard inquiry happens when a lender checks your credit to make a lending decision. 1 or 2 a year is fine, but a flurry of applications in a short time signals desperation to lenders, and it can harm your score significantly. Be surgical with your applications. Only apply for credit you actually need, and when you are confident you will be approved. The mindset is one of abundance, not scarcity. You don't need every credit offer that comes in the mail. You are building a profile so strong that you get to choose. You hold the power. Let's recap the battle plan. 1. Conduct reconnaissance and purge all errors from your reports. 2. Build the foundation with 100% on-time payments, guaranteed by automation. 3. Launch the utilization offensive by mastering the statement date and increasing your limits. 4. Bring in strategic reinforcements by protecting old accounts and building your credit mix. And 5. Adopt the fortress mentality, protecting your score with discipline. A 600 score is a story of what was. An 800 score is a testament to what you decided to build. Just like in our last video, where we laid out the plan to destroy debt, this is a plan that requires focus and intensity. Both are about taking back control of your financial identity. The power was never in the hands of the credit bureaus. It was never in the hands of the banks. The power has always been with you. It is in your discipline, your strategy, and your refusal to be defined by anything less than your full potential. If you're ready to master not just your credit, but your entire financial destiny, make sure you are subscribed with the notification bell turned on, and let's commit. Comment below, what is the first mission you are going to accomplish this week? Thanks so much for joining us today on Clever Money Hacks. Bye for now.